following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Friday night here in Asia, Friday morning in the States. A lot of things going on in the wee hours here. So we're going to try to cover what we can with the stock indexes and our indices. And what we're going to look at initially is we're going to kind of focus on our scanner for a little bit here. And we talked a lot about not really kind of buying the breakout recently on the S&Ps above that 2068, 2070 area. And what I'm showing you now is all the stocks in the S&P that are trading below profiles now. Now, we had a couple of hints here. It wasn't really a strong situation on our daily, weeklies, just about that long-term view. Still relatively positive, but on the lookout for kind of cracks in the armor. The 240s are now crossed over, and what we're going to do is let's just pull up our dailies. Let's get into, and this is our desktop scanner here. 122 stocks post at the end of the day yesterday are trading below profiles, and this morning obviously we had a little bit of a pullback in the S&Ps, and I have no idea why anything having to do with Greece is astonishing to anyone. As if they were going to settle this. But anyway, when we open this morning, we're probably going to have a little bit of a flip over here in our daily Brett situation. Now, what that means is this. That means that as we go into our S&Ps, I'm going to pull up, and we've been noticing our bonds and notes, we're just kind of compressing into those unfair highs recently, and those have popped. And that was really a bad time for the U.S. stock market. But as we look at this, we kind of rallied back a little bit. This is our daily situation, and as we, look at the daily profiles, maybe crossing over on our speedometers, if you will, showing long-term or intermediate breadth, kind of turning negative. That's really, really not good as we're above profiles on the daily S&Ps here. So let me try to get our chart back here. Okay. All right. So, all that being said, it's a precarious situation to just load up on the longs here. We've got some slowdown numbers coming on globally. The S&P kind of move up has lagged actually some of the other indices. And, this is something I'm just staying away from. I'm actually hoping we can get back down below the 2070 area and then step on the gas pedal a little bit. On the short-term trades on the S&P, you do have a little bit of leverage around 2092, 2093. You kind of like that it's broken down and rallying back up into that. Not a lot of faith in this index right now. And if we just immediately turn to the treasuries here, we're going to go into the 10-year. We talked about staying away from being short against this inflection point, 129.24. This was kind of the target above, up top after we had kind of, traversed the entire fair auction here. Talked about, nope, it's not time to short treasuries or bonds right now. And lo and behold, we've kind of got our neck above this area of concern that we were looking at. But, we talked about this, higher lows and just kind of wedging up into that. That's not what you want to see from the short side, from classical technical analysis type theory. So what we want to do here is continue to kind of look at the usual suspects, try to get all the clues we can to try to figure out what's going on with the markets here today. The euro, this is something we had talked about. We were kind of compressing up into this 107.02. We talked yesterday, in fact, about this is something you don't want to see if you're short. But picking battles around that inflection point, all we have to do from the short side is place the stops, take our medicine, and move on. Now you're up in the balanced area, and we may just rattle around here for a little while. So as we look at the euro and we go into the British pound, we talked about the British pound the other day, and Eddie was on the show, and we talked about this 147.27 combined with 147.73 getting above that border. Now, he said he was wanting to go long and he wanted to see it cross that border. And we've gotten, and, we talked about yesterday meeting these targets above 149.81. That's happened, and we've actually breached this. So this technical damage on the short side for the British pound is, pretty significant. Now you got to pay attention to that inflection point on the daily. So I was a big fan of just kind of turning the rents the same way and shorting this product. But if you look back at what Eddie was talking about, he would kind of put a couple things together and was hoping we get back in the fair auction on the weekly. That's exactly what happened. Now we're in a long-term balanced area, and it's kind of in no man's land on the long term, but on the daily we definitely had some technical damage. So let's look at the Shanghai really quick. This is something I've been following. I've been talking about okay to be long, not okay to be short. We talked about this profile appearing well below in the Shanghai the other day, right in there, and that's a very bullish sign. And look what's happened today. We just made a insane move up, and there's some ETFs that you can track as you look. And let me see what's going on here. Lost my chart again. Why is that happening? You guys see my chart now? We got our chart back. Okay. Why is this happening? Joey was on the show. We talked about, getting above this profile, and if we could get a pullback, we'd buy it. If we kind of rattle around here, we don't have to chase it. That's a big move in a short amount of time in the Shanghai, and there's really no end in sight. And Joey talked specifically about this, just some of these Asian indices just going out of control. But let's go right to the Shanghai really quick. I'm sorry, that one. We talked about possibly getting a pullback in the Shanghai to buy after we had this yellow bar up here. Now we're right down into 26,964, and the low, that's the leverage point down there. The low is 26,958. So I don't think you can ask for anything better. We've kind of had the new profile up here. We're at the bottom of the fair auction, and this to me right now is a great situation. You kind of want the market to come to you. We've hit the inflection point. We always talk about, where's the risk? We know where to put the stops based on your appetite for risk down here. I guess you know where to put the stops, not we. And, we've got a buying opportunity in Shanghai right now. And that's kind of nice. All right, so let's take a look at, let me see if I've lost my, okay, here we go. We still got the chart. All right, so let's kind of keep moving. We got a lot of stocks that we want to talk about today that really the scanner had kind of foretold a little bit, were, showing their hand from the short side as the market was going up. And, the Whirlpools of the world, the Walmarts of the world, the UPSs of the world, the AMATs of the world, the CHRWs of the world. We're going to cover those as much as we can today because, what do you do now? The market's seemingly starting to crack. It's kind of rattling around here. But let's go back to the S&Ps and see where we're at right now. We're down 10 from the close yesterday. We've kind of rallied back up into that 2092. If you can look at our 60-minute charts here, the high on the rally back has been 2092. And guess where our inflection point is on the short-term leverage situation on the 240s, 2092. So that's kind of been met and kissed this morning. We may drift a little lower. Make sure your stops are in if you're playing the short-term game above 2093. And we're going to go right into the DAX. This is something that just really, the 12,243 broke down, which coincided with that 12,205. That was kind of that weekly up for high, daily up for high. Everybody gave it up. And now we're having technical damage, actually. So, what do you do with this? The euro's rallying. These, German stocks are going to have to reprice themselves a little bit here. 11,981 is going to be the resistance area for this right now. You're going to have to pay attention to that, pay attention to the euro. And going back to the euro concerning the DAX, we want to take a look at, again, the inflection points you want to pay attention to. We could, rattle around in this fair auction week. Now that we've kind of broken stride here, we could go back up into the 110.52 area. So, that's not a lock, but, be aware that we could climb higher with this product. With the Greece news out this morning, I'm actually, that's a that was just a foregone conclusion. I don't see that really disturbing too much, but pay attention to it. All right, so let's take a look at our treasuries really quick before we go to break. And here we go. So I'm sorry, I want to go to the 30-year. I'm sorry. We talked about the 10-year. We're going back to the 30-year because somebody had sent me a comment about that just to look at it. Here's the 30-year situation. This 165 is going to have to be, where we start looking at this in a breakout pattern. We talked about leverage off the 162.22 the other day. That's been nice. We're still in the balanced area, no breakouts yet, so just pay attention to that number. And again, I wouldn't be a big fan of shorting the 165s right now. I think in the markets, the stock market's got a good chance to come off a little bit here, at least down into that 2070 area. Here's gold. Again, kind of a no play right now. We kind of got some leverage off the 182. We haven't met the targets at 12.15. The dollar's coming off, and gold's just kind of sitting around in the balanced area. I don't like shorting this product, but again, my stops are below 11.82 on the intermediate to long term on gold. So silver still hadn't gotten above 1660. We've been talking about that. November beans, relatively bearish on this product. Got that bounce, got above 942.5. Still waiting for it to break down below and try this again. And obviously, any rallies up into 973, I'm going to be a seller of November beans. Let's take a look at another thing that's on the radar screen before we go to break, the XLF. This has kind of gotten into the maximum Custer's last stance here on the unfair highs on the weekly, 24.47. We kind of got through that daily, 24.28. So 24.47, we're going to have to pay attention to that. Any closes above, I'm going to have to kind of just, be done with this for a little while and just see if we can wait until it comes back down below. Talking about bank stocks, we've got Citigroup to look at later, and Goldman Sachs. It's not a financial stock, put it that way. Let's take a look at the XLE really quick, and crude oil. This is, again, something, we just talked about a lot. Just, watch out shorting crude oil. There was a lot of, like 3 or 4 factors in your favor to be long crude oil lately based on, where's the risk? I mean, the risk was to be short the way the underlying was acting. So here's the XLE. We've gotten above. We've really started overreaching. That 80 area is going to be the retracement to buy at this stage on the long term if we ever do that. And here's the underlying crude oil. I like it. We're going to talk about it a little bit more when we come back from our first break.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We were finishing up with crude oil. Here's the May contract. Here's the 240-minute view. And we talked about the other day, we started having, some signs that a new profile is going to appear on our short term. And we talked about this thing not being over yet, possibly. And that's what these inflection points are for. This is 55.04. We had a kind of a situation before that, we had crossed the border at 53.67, had cleared the dailies, the weekly unfair highs, and then we're kind of always letting the next time frame down kind of regulate the trade. So it's a great example. The low was 55.07. This is 55.04 within 3 cents, and then we did the moonshot right off of that. This was after our show yesterday, up into 57.42. So that's nice $2.5 barrel move in about 4 hours there. So, what do you do with it now? If I'm short, I'm terrified, and that's kind of I always try to put myself in the other camp. I don't like this. So I think we've got a good chance to move higher on crude oil, believe it or not. And, where's the target? Let's go into our long-term view for just a second here. There's a massive hole here, all right? This is called a hole in the marketplace. There's nothing here. This thing could just drift up on ether. And again, don't let me sway your opinion too much. Put your stops in. And where I'm putting my stops, again, is below this 55.04 area. All right, I'm just going to give it a chance to rattle around a little bit. Here's our daily. And as we move back in time, the next stop could be at around 61.90, 61.80. Okay. That's the targets I'm looking for, believe it or not. All right. So we got some great peanuts in this country. They put garlic and salt together. It's just, I'm a peanut guy from North Carolina. It's really, really good here. Anyway, let's start taking a look at some of the stocks on the radar screen. A couple of stocks that were that I was looking at with the scanner. I'm going to pull this up and let me grab it here. Here we go. Goldman Sachs was an earnings-related stock. I'm sorry, I've got some of these mixed up. But let's take a look at this. This is Goldman Sachs. This is a $200 stock. It's obviously a financial stock. It's obviously, you know, one of the leaders of the financial XLF situation above 196. Let's just call it 197. So what do you do with it now? You don't short it. You don't short Goldman Sachs right now. Let's take a look at Walmart. This is another one we've been following pretty religiously. It's been on our short list. It's been on the scanner forever. And why has it been on the scanner? Because we were looking for weak stocks in a strong market and came back and kissed this 83.48. Probably getting tired of me talking about this. This has been a very boring, nice little situation that the market now is to some degree given some help on the way down. So that's what we're looking at with Walmart. Let's, again, go to some of the other usual suspects here. This is something that we looked at a little while back. Applied Materials, we looked at it because we had gotten below weeklies, and then we came back and kind of retested that 23, 25 area. Not a lot of juice in this. It's a $20 stock, but remember, boring can be good, and now we're getting below daily profiles. So even we got an inflection point, even after we broke down the weeklies, we still got a chance to rally back into these dailies on Wednesday. And how cool is that? I mean, now you're just having a complete technical damage situation on the weeklies and the dailies on AMAT. And the scanner kind of put that on my radar screen a couple of days ago, or a couple of weeks ago, actually. Let's take a look at UPS. This is still the action yesterday was kind of, you know, a little bit drifting up, but let's take a look, and that was kind of a little bit market related at the end of the day. Now we're just kind of end of the day yesterday drifting lower. Pre-market we're trading 95.80, so this thing is just continuing to drift lower. We had that profile up here above. This is a great short candidate in my opinion, with some market help, could drive some points your way. This is another one Tom and I were talking about, CHRW. He actually pulled it off the scanner, kind of put it on my radar screen, and this is one that's just come unglued here. You know, just drifts below dailies. Now we're below weeklies. We're going to talk about this a little bit more when we come back, folks, and we got a ton of other stocks to go through. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We got the S&Ps up, had a little bit of a movement on this CPI report. And we're off about 5 S&Ps from where we're at. We're tracing back up into that 2092 area, excuse me. So that's the story on the report. Let's just take a look at our scanner really quick to see if any stocks are opening. It's getting close, guys. 122, 143, 143 stocks above, 122 below. But half the stocks in the S&P basically are within the balanced area. And that's not really coinciding with the S&Ps themselves. So be on the lookout. We could start cracking a little bit here. Make sure you put your stops in if you're playing that game. Let's go look at GE really quick. And here's the situation on GE. Why are we looking at it? Because it's been a relatively strong stock this past week, last week, and breaking above that 26.16. It's been very positive for this stock. Got up to almost 29. And as we look at the dailies, as it's pulling back, we got a daily profile. Let me see where we're at pre-market here, 27.20. So, what do you do with G? We talk about always letting the market come to us. Now you got a new profile that's appeared. You got new inflection points, and we've already kind of come down and started rattling around down the bottom here. Do you buy this? I mean, do I think the market's going to help it? I don't think so. But, this has kind of been a runaway freight train, and you've got to pull back into support here. You could easily just pick a battle here and put stops down below 27 and just see what happens. That's really a low-risk trade. But, again, the market may drag this down below this profile, so just be aware of that. A couple of the stocks that we need to pay attention to that are earnings-related type situations. This is a stock that, I mean, used to drive me nuts. Here's the weekly on this. Travel Zoo. I don't know if anybody remembers this thing. It's been all over the place, but now it's starting to break out above $10. I know we don't talk about $10 stocks too often, but there could, some people getting squeezed on this right now. And if you're going to trade it, you obviously poked your head above profiles, $10 on the weekly and daily at the same time, and then we got some news, obviously. But you can't, in my opinion, really just go out there and buy this thing. You've got to at least try to look for some new profiles on the 240 or the weekly, or excuse me, the daily on this type of animal. Just want to throw out a crazy stock there. Let's take a look at Citigroup really quick. $53.60 pre-market right now. This is yesterday's close. And what's going to happen here, possibly, the XLF, I'm not super bullish on that at all right now. We're going to have to wait and, get some new profiles up here on the daily to start looking at this again. And I've had some emails about it this morning. Here's the 240s. I'm not a big fan of trading Citigroup off of 240s. It's kind of a stock that probably deserves to come into some longer term inflection points to really get the most out of trading this thing. And right now, you just gonna have to wait and see on Citigroup. So I apologize for the people that were sending me emails about it. What do you do with it now? It's obviously a strong banking stock on a relative sense. But the XLF could kind of drag this down. I mean, I'm just, throwing some things out there. We could get some new orange bars appear on the dailies, which would mean a new supply area happening up top. And that's kind of the way that bounces. Mattel is something that we looked at after we started, we just the thing was just sick. And we were kind of popping up on the scanner all the time for the last couple of months. What do you do with it now? You've got some earnings out on it. It's 27.12 pre-market. That is actually above this weekly unfair high. Now, this is a really thin profile and on a relative scale. And when we breach something like that, we could run for a while. So right now, pre-market, we're sitting right above that inflection point. I wouldn't buy it until we had a weekly close, and obviously today's Friday. We might have a weekly close above that inflection point. That's a pretty powerful area between 26.15 and 26.42. If we get through there, we could just kind of just march forward a little bit here just to start getting some people out of this thing on the short side. But Mattel's got some issues. It's really not clean and clear of the long-term unfair highs in the broad sense. We're just basically retracing back up into inflection points. If you just kind of step back and look at what's going on here, you got to get some confirmations to get out of this balanced area on the long term to really start looking at this as maybe the worm is turned for Mattel. That just still hadn't happened for me. Okay, let's take a look at Sunoco. All right, so this is an earnings-related type situation. What do you do with this thing now? Not the market didn't really accept that very well. I'm still, as I look at this, I'm still a buyer of this thing around 43.91 up into 44.33. So you got about a 40-cent DMZ there to pay attention to. Pre-market, you're trading 44.70 and some change. So we're still hanging in there. I still like what the stock's doing, so I'm just kind of looking at it as buying opportunity with stops below 44 based on your appetite for risk on this one. Let's take a look at GGP. These are all stocks right out of the scanner, and I was trying to find some things that were breaking down, getting below profiles things that were showing their hand a little bit early, 29.22 sitting there below that unfair low, and then we got 28.81. So you're kind of clean and clear of some DMZs down here. That's where you can kind of orient your stops above that area. And this one, general growth, not cooperating with the market lately, and now kind of starting to show its hand as the market's starting to have some volatility. Let's take a look at Whole Foods really quick. WFM. This is also right off the scanner. And this one, to me, you know, could possibly run for a while on the downside. 50.76 finally broke those things. And again, this is a really good primer on profiles here. Like, you know, we had the orange bar, lock in, new profile, traverse the entire thing, kind of bounced off it a couple of times here for a couple of weeks, but kept edging lower, especially with the closes. If you want to be long this thing, that's not what you want to see. And then all of a sudden flush. Okay, so that's a good, you know, historical, classical, you know, doesn't really want to be away from that inflection point type lesson. And here's the dailies at the same time. So now Whole Foods has got some issues, and you know, we're gonna have to get back above and clear 51, 51 and a half for this thing to start looking attractive again. And the only other way would be to just have some more flexion points to pay attention to on the dailies down here. And I just, you know, I don't see that happening right now, and I don't see it happening anytime soon, actually. So let's take a look at Home Depot. This is something else that was on the scanner. All right. Here's the long-term situation here. Looks a little heavy. And then as we go to the daily, we kind of have been looking at this like can't stay in the balanced area. You know, let's try to keep playing the same game. Above 115 stops. I think this thing could actually start doing a little number on the downside pre-market. It looks like we're trading 113.10. So continuing to edge lower. Would love to have some market help on this one. Don't know if that's going to happen. It just kind of feels like we may have some pullbacks here in the broad market. So kind of keep your eyes on that. Bonds and notes have kind of turned negative here, but not by much. I mean, I'm not even paying attention to that. That's kind of a sympathy thing, I think, right now. But again, my stance on the bonds and notes is just okay to be long, not okay to be short when it comes to those things. Let's take a look at the XLV really quick. This is something I was kind of beating the table about, that it was just such on so many levels, such a good relative strength trade and safety trade. 72.70 weekly and for highs. I still think you want to just pay attention to that. Stop out if we get any lower. There's more inflection points down below, but no sense to hang on to that thing the whole fair auction. Right now, you know, still looks like a long to me. So that's what I'm paying attention to on the XLV. All right, a couple more stocks right out of the scanner. SHW. Sherwin-Williams. Okay, so what do you do with this one? All right, it's a $283 stock. It's relatively thin, so those are the scary stocks a lot of times. And if you guys trade listed stocks and they're thin and they're high priced, you know what I'm talking about. If you ever remember Laboratory Corp a while back, that was a nightmare. So let's take a look at this. 282.97 coupled with 280. So you've got a pretty big, 282.97 coupled with 280.82. All right, so you've got a stock that's shown a lot of, you know, hanging in there patterns. If you look at this, I mean, this is real. All right, so my thought on this is a little polarized here. So pay attention to this. This is kind of stock. I mean, we kind of, you know, based and consolidated. When this type of stock gives it up, and the reason I kind of mentioned the high price stock, relatively thin, listed, the specialist who's dealing with this thing, if we have any kind of market kind of pullback, this thing is going down to 267, 268 quickly, and he's the one that's going to be making money off this thing. So I'm banking on, let's get below 280. Let's get a close below 280 on a daily at least. And then let's trade this thing down to 267. That's going a little bit against the grain. It's obviously a relatively strong stock, but this would, really require some market help. But I think that market help's going to come. Okay. Okay, so let's take a look at BLK. This is also off the scanner. Oh, no, this is earnings related. I'm sorry. BlackRock, another high price listed stock. Keep your seatbelt on. I actually had a question about this. So, what do you do with this thing? It's in the middle of a fair auction. It's been kind of trending up. Let's see if the earnings are out. Let me see here. It should be out. Maybe they're not out. Anyway, I'm staying away from this one. It's really got no major clues to it, long or short. And I think the market could drag down a lot of these high flyers, so to speak. So we're going to kind of pass on that one. BRKB. This is off the scanner. It's not is that it? Let's see if I write that down wrong. There we go. BRKB, Berkshire Hathaway. I think that's BRK.B. Yeah. So BRK.B, believe it or not, this one was on the scanner and kind of indicated some weakness here. 143 got below on the weekly, and the 142.92, the 143 on the, so Berkshire Hathaway, I don't know if you can get anything borrowed on this. I guess you could. Half the country probably owns it. So this is something, looking at this, again, the primer is, got down to the inflection points, didn't want to bounce, and now we do this. And we may have some more downside on Berkshire Hathaway, so pay attention to that, especially if the market starts coming off a little bit. He's a big fan of some financials too. All right, let's take a look at Whirlpool. Here we go. I think this has got much more downside to it. I love how this action was on the weekly, on the long term. That's the situation on Whirlpool. These are all off the scanner. Scanner's doing real-time sorts, so I'm going to go back to it and try to catch some new attractive-looking GGP we already looked at. Genuine Parts Company, GPC, Hudson City Bank Corp, HCBK. These are all ugly situations here. IPG, Interpublic Group of Companies, awful. Some things that are turning, LLL, Legg Mason, LM, Southwest. Looked at Southwest the other day. And as we come back from break, we're going to take a look at a couple of the stocks I just mentioned, and that includes Southwest. So we'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show, and we're looking at Kohl's right now. This is KSS symbol, and the weekly has just been bonkers here, but and no profiles. But we're looking at the daily. I like the action here. I like stops above 76.75 on Kohl's to go lower. Scanner kind of gave me that notion. Picked out some other things. L3 Communications, Legg Mason. We already talked about that. Marriott, McDonald's. Let's take a look at McDonald's. MCD. We knew that was going to happen. So coming off that 97.39 area, we're down about $2 already in one day turnaround. Trade 95.30 and some change pre-market. I still like that. I like stops above 97.39 on McDonald's. MMC, Marshall McLennan. Interesting situation here. Let's just take a look at it. Again, a lot of these stocks, they've obviously done well. This is one, it's on the scanner, it's below the box, it's, kind of retraced back up into that area. I don't think it's a bad situation to try to short this. 57.20 above there stops. This is a little bit more of a scary situation. You probably got better shorts out there, but again, you've got 57.28, 57.43 to kind of put stops above that DMZ. I think the market could, some of these high flyers, you take two stances. Some of them, you try to find weak stocks and strong markets, and sometimes you you want to find stocks that might be a little overextended and kind of almost tighten up the stops on little trades like that. So, but the boring trade is always the good trade. So let's take a look at a couple of other ones that are on the radar screen here. And those are the really good ones, in my opinion. PCG. There we go. All right, so PCG long-term, I like this. I like how heavy it looks. I like stops above 52.5 on PCG. And I like the daily. I mean, this is, again, it's not going to break my heart if it reverses and stops me out. But I feel like this one, you've got some decent numbers in your favor here on this one as far as inflection points and just general action. And any type of market, help would possibly just ride this thing down and give you some new levels to look at hopefully pretty soon. These are all in the scanner. Let's take a look at Raytheon RTN. All right, now this one on the weekly, we've kind of gotten back down below profiles on the daily. It's a similar situation. I like stops above 110 on Raytheon on the short side. Excuse me. So let's go back to the S&Ps. We've got about 45 seconds left here. Let's just kind of review what's going on here. Here's the dollar situation. We're kind of starting to hang in there on the dailies. Tried it at 98.75. Talked about if that didn't work, we can try it again at 97. Dollar, again, might be a buy down there with stops down below. Let's take a look. And the market would like that. But here's the situation on the S&Ps. Again, I think we can come back to 2070. Use those 240s, mainly 2092 as stops today on the short term. Be prepared to get back in the short trade. If we breach that and you get stopped out, it's not a bad thing to get stopped out, folks. You can always get back in the water. With most of your capital left, by the way. Keep that in mind. Guys, have a great trading day. Have a good weekend. Steve Rhodes is next. Hang around. The guy is smart. You'll enjoy it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.